Good morning, everyone. I'm Jane Morgan, and thank you for joining us today for the QMines Limited Investor Webinar. QMines, with the ticker code QML, has this week announced a truly transformational transaction, a $15 million strategic investment from the QIC Critical Minerals and Battery Technology Fund, managed by Queensland Investment Corporation, which is one of Australia's largest and most respected institutional managers. What's particularly notable about this deal is not just the quantum, it's the structure. So $5 million is coming in equity and $10 million is being deployed in exchange for a 2% net smelter return, a royalty at the Mt Chalmers copper gold project in central Queensland. The combined effect is that QIC becomes QMines' largest shareholder, providing institutional validation and strategic support, while dilution for existing shareholders is materially reduced. Importantly, this follows months of rigorous and comprehensive due diligence by QIC, which means the market now has independent validation of the Mt Chalmers copper and gold project and its development potential. Joining me today is our Executive Chairman, Andrew Spark, and Richard Wittig, our Development Manager, who'll be running through today's presentation. Before I hand over to Andrew, though, please note we'll be hosting a Q&A session following the presentation. So if you do have questions for Andrew or Richard, please use the Q&A function, which can be found at the bottom of your screen. But I will hand you over to our Executive Chairman, Andrew Spark.
Fantastic. Thanks so much, Jane. And thanks everyone for joining today. Look, we've got quite a fun sort of lineup and a really good update for everyone today, obviously on the back of this QIC investment. But I thought I'd also use the chance to actually introduce to you our recent hire in Richard Wittig. I might just hand the mic over to Richard. I thought it was a great opportunity just for everyone to quickly meet Richard. And Richard, you might just, if you don't mind, just start by giving everyone a quick bit of background about yourself and what you'll be doing. I think that's a great way to kick off today's webinar.
Perfect. Thanks, Andrew. As mentioned, Richard Wittig, Development Manager. I've completed over 40 feasibility, over 40 project development studies, and I've brought multiple greenfield developments through the feasibility studies into operation. I'm currently leading the feasibility study, which consists of the technical, environmental, and the approvals portions of the definitive feasibility study.
Great. Thanks, Richard. No, really appreciate that. All right. And before we kick off, for those who I haven't met yet, my name's Andrew Spark. I'm the Executive Chairman of QMines. I founded the business back in 2020. After selling our last business to a large private equity group. So since then, many of you will know the story quite well by now. Since then, we've really worked hard to really grow a business in the central Queensland region, which we'll get to shortly. Behind me in this picture here, you can see our flagship project, Mt Chalmers, which is a high-grade historic mine. And here we're primarily targeting copper and gold, but there are also several other metals that'll become really good byproducts to the mining operation here, which we'll get into shortly. And as Jane said, we thought it was great to have a webinar today because there's a really fantastic update. Obviously, we put out this week with QIC joining our register as our largest shareholder. Just to start, I don't know if anyone's ever seen a government organisation getting involved in a listed developer. They're very few and far between. So it's, as Jane said, we think it's fantastic validation in the assets we have here, the work that our team have done, and importantly, it really de-risks this development path. It gives us the capital we need to really accelerate this mine back into production. So we'll get in a bit more detail shortly. So just as a really quick refresher on the strategy for those who haven't actually come across QMines before, as I said, we've really worked hard to build a business in central Queensland. Okay, it's about 8 hours north of Brisbane. It's right on the coast. And as you can see here, we've now got 3 projects after acquiring all 3 of them over the last couple of years. our flagship project is Mt Chalmers, which is just on the eastern side of Rockhampton there, which is the largest package. There's 4 known deposits there. Obviously, the Mt Chalmers historic mine is the centerpiece of the development strategy here, but there's still a lot of upside, which we'll get to throughout the presentation today. And also, more recently, a couple of years ago, we purchased 100% of the Develin Creek project, which has another 3 high-grade copper and zinc deposits, similar style to Mt Chalmers, about 90 k's to the west. And last year, we finished the acquisition of our Mount Mackenzie project, which is a little different. It's quite a high-grade gold and silver project, an epithermal, which we'll get to shortly. And we've just completed about 10,000 meters of drilling there. We have a lot of those results still in the labs, still to come. So, and I should mention it's quite exciting to note that our last lot of results that we released had some really high, I think it's fair to say bonanza grade, gold and silver hits there. So, so watch this space, more to come from Mount Mackenzie. But before we get to the next slide, I think it's worth just really touching on the fact that we're just so lucky to be where we are here. There's just infrastructure in spades. And that's important because it gives us a really low capital advantage as we start to take these primarily the Mt Chalmers project, but hopefully over time, some additional projects down that development curve and into production. And that effectively means there'll be less dilution, there'll be more, hypothetically more reward for shareholders, and we'll all own more of the business when they actually get there. So there's 9 deposits here, primarily focused on copper and gold, but there are a lot of other metals that will become byproduct credits, and an absolute boatload of infrastructure, which will really give us that low capital advantage as we take these down that development path. Okay, I thought I'd just do something a little different here before we get into the QIC transaction, but just to talk about what we've done, not what we're going to do, but we'll get to that later in the presentation, but also what we've done. And you can see here from this slide that the QMines team have always had a real commitment to drilling, okay? We've now drilled about 50,000 meters or 50 kilometers of drilling since listing just under 5 years ago. So, we're real doers. We've really used that drilling to not only provide a lot of news flow for our shareholders, but also to really grow the resource base and give our shareholders leverage to potential, new discoveries in the region. So, and I will say that is not going to stop. So, as I say, we've drilled, I think it's over 50, or it's about 300 odd holes, but over 50,000 meters of drilling since listing. And this next slide really shows the benefit of that drilling or that capital investment. Okay, we're pleased to say as a team that we've now pushed out 8 resource updates across our projects across those 5 years since listing. So, and I'd challenge you to find a company that's really invested and committed like we have over a long period of time, even when things got tough, when the markets are down or the metals price are off, we've just kept drilling and kept growing. And it's important to note that we do have a further upgrade pending here from our Mount Mackenzie high-grade gold and silver project, which we intend to put out in the coming months. So watch this space. This will keep growing, and there are additional M&A opportunities in the region that we'd like to look at, which will further hopefully grow this over time. So now let's get into the exciting part, the funding. Okay, so as Jane mentioned right at the start, we've recently achieved or completed a funding deal with Queensland Investment Corporation. They're the managers of their critical metals funding trust. And as Jane said, the $15 million was broken down into 2 basic structures. One, a strategic placement for $5 million of the 15, which importantly was done at a premium. Okay, and when obviously we've got the war in Iran and all those other global challenges going on, most small mid cap companies prices are off. It's fantastic that we've been able to deliver this investment not only in a non-dilutive way, and we'll get to that shortly, but also at a premium to the current market price. So we worked really hard, and QIC, I've got to say, were fantastic. Really worked well with us to achieve what we needed to achieve to get this done for the best interests of our shareholders. So $5 million was an equity investment done at a premium, which will now make them our largest shareholder. And then there's a further $10 million that will be completed, as Jane said, as a royalty, a 2% net smelter royalty over all our projects. Now, why is that important? It's important because, as I said, it just really reduces the dilution of such a large capital injection into the business. And to put that into perspective, I think from off the top of my head, we're issuing about 95 million shares to QIC for their $5 million placement. But if we were to do this whole 15, bearing in mind we're about 30 million market cap, so almost half our market cap in capital, if we were to do that all as an equity placement at a typical discount of 15 to 20%, you'd be issuing circa 350 odd million shares. So to be able to do this in a very low dilutionary way and only issue about 95 million shares, it shows that we've really worked hard on some of these key points in this funding package to make sure that we really reward the shareholders who have been there since day one and make sure that they remain large shareholders in the business going forward. So it's a real credit to QIC and their flexible approach to how we went about this funding to really make sure we could create a win-win for both parties. But importantly, this funds us all the way through the DFS, which is obviously why Richard has recently joined the group, and we'll have a lot more to say about that in the coming weeks. We've been really accelerating that process behind the scenes, and it'll also get us through the FEED study and hopefully the environmental approvals and mining license approvals passed. So it really gets this business a long way and allows us to give our shareholders a lot more pricing catalysts, but also achieve a lot more significant milestones that we expect will significantly re-rate the value of this business in a very low dilutionary way. So it really is a tremendous outcome for our shareholders, and I really want to thank QIC for their support throughout this process. The other couple of things that I think are worth touching on here is there was a very extensive due diligence process, okay? Very extensive. So it went on for, several months, probably just under 6 months. We had consultants poring over our geology, engineering and mining plans. We had environmentalists looking at our environmental credentials and how we're going to approach things. Native title, you name it, they've gone through this business with a real fine toothpick. So that for me that's been a terrific outcome because it really, I think, validates the great work that the team at QMines have achieved and a lot of the science they've achieved over the course of the last couple of years. So not only is it low dilutionary, it really, I think, validates a lot of the work that's already been done and the future development prospects of the business. All right, so let's now have a quick chat about the Mt Chalmers mine. Just really quickly, this was probably more for some of the local community members who are joining the group to give people a bit of context joining the call today. There is so much infrastructure here. It's, as I said right at the start, it really gives us this low capital advantage. So just before we get into this detail here, you can see the Mt Chalmers mine is about 20 kilometres to the east of Rockhampton, large regional town, and then you've got our Develin Creek project about 90 kilometres to the west, and Mount Mackenzie up the Bruce Highway and up the rail line to the northwest. So you can see we've really focused on this region. There are other potential opportunities in the region that we are looking at as well. But I think, I've always tried to build businesses with a real focus, and I think that's really going to bode well for really taking these projects all the way through to production. And as I said right at the start, we're just so spoiled with infrastructure. The Bruce Highway, which is obviously a major arterial road that traverses the coast of Queensland, runs through Rockhampton. Large gauge rail goes all the way down to Gladstone, large port of Gladstone. We've got the second largest power plant in Queensland here, baseload coal-fired power at Stanwell. And importantly, and as you're probably seeing at the moment with all these challenges in Iran and other areas, importantly, we've got grid power to this project on all three sides. So we're very, very lucky here, that we've got this infrastructure that will not only accelerate the timeline to production, but it will also really reduce the cost, which basically means that we all own more of the business when we ultimately get there. Now, I thought I'd just touch on this quickly because a lot of people just really think of us as a copper and gold, developer. But I will note that there are several other really good byproduct credits here that we'll be looking to extract as part of this first mining operation at Mt Chalmers. Silver is obviously a critical metal, copper is a critical metal on the USGS list, sulphur is a critical metal, and zinc. So we've got 4 of the 6 here are defined as critical metals on the USGS list. Obviously, copper is the primary driver of the economics here with a very strong gold credit. But as you can see, there are a lot of byproduct credits here. And why that's important for you guys is that this will be a very efficient mine. Okay, we're not just mining one commodity. So for every tonne of mining that we extract and all the costs of extracting and processing that tonne, we're going to pull out 6 different metals. So that is why the economics from the PFS were so fantastic. Basically because we've got all these additional credits that really mean that this will be a really high value, opportunity and for our shareholders. So I think that's an important point to make. The last thing that I'll just touch on this slide is the fact that we've got an abundance of sulphur here. Now, obviously in the past, a lot of companies wouldn't seek to extract these types of additional products, but many of you will know from the recent recent sort of media things that have been going around that sulphur is becoming very scarce, particularly at the moment with with what's happening in Iran. Sulphur is obviously largely produced from oil and gas extraction. And what we're seeing obviously in Iran is really curtailing a lot of the sulphur distribution right around the world. So we've got a large abundance of sulphur here at Mt Chalmers and also at Develin Creek. And there are other deposits in this area in around Rockhampton. And all I'll say is watch this space. There is potential here to look at how we can really monetize those additional metals for the benefit and also improve the access to those minerals in Queensland and in Australia for the benefit of the local industry and those sort of things. So another exciting metal that we're looking to extract. Now, many of you will know this a fair bit about this deposit after all the years of being invested in QMines, but let me just really quickly touch on this. Mt Chalmers is obviously the flagship project for a reason, okay? Two key components to this deposit that make it, I think, very different to what a lot of other things you see out there. Number one, it's shallow, okay? It's shallow and it's flat lying, okay? And why that's important is it means this deposit is very amenable to open pit or low cost open pit mining. So that's the first point. And the second point here is that a lot of the grade here is actually at the top of the deposit, where most of the time you see these steep dipping deposits where a lot of the grade is improved with depth. So the reason that's beneficial is it means this pays back capital or pays back returns to shareholders a lot earlier in the mine plan, which is fantastic. And that's why when we get to the PFS metrics shortly, and I know Richard's working on updating the DFS as we speak, so we'll have more to say on this, but this particular deposit is really one of the best in my mind, out there, largely because it returns value to shareholders quickly, it pays back capital really quickly, and is relatively simple, low cost open pit mining. So we're really lucky to have this as our cornerstone asset within the business. Now, again, many of you will, I suppose, be across this, but there is a lot of upside in this region as well. And to date, we've only done a small amount of drilling at Woodshaft, but the intention going forward is to start to really look closely at Woodshaft and also Botos, and see if we can't bring in some more near mine deposits that could really, grow the mine life, extend potential production scale, and improve returns for shareholders. So watch this space. There's some work going on behind the scenes at the moment to look at how we can monetize these other deposits in the region. Now, just quickly, before we get into the PFS results, and obviously we're looking to deliver a DFS in the fourth quarter this year or first quarter next year. However, I think it's worth just reminding our shareholders, how valuable this flagship project, Mt Chalmers, is. Okay, but before we get into these metrics, I would have loved to have gone and updated them for current metals prices. Obviously, this PFS was put out 2 years ago. But so bear in mind when we're going through these that these numbers are already, particularly in terms of the net present value and revenue and those sort of things, already a lot higher than they once were 2 years ago because metals prices have run. And to put that in perspective, since we did the PFS, copper's approximately up about 40% in pricing terms. Gold's up about 130% in pricing terms. Silver 300%, sulphur 300 to 400% at the moment, and I could go on. So watch this space. When this DFS comes out, if these metals prices hold or continue to move forward, expect these numbers to really improve substantially. So the first key point here is the capex is relatively low, $190 million to build a 1 million tonne per annum plant. In central Queensland, really allows us, it's a relatively low capital advantage, and that's because of all those additional infrastructure that we have here. Net present value, as I said, remembering it's about 2-year-old data, is about $373 million. NPV 8, not a cheeky NPV 4 or 5, but you commonly see out there. So very conservative, particularly with metals prices at the moment. Initial 10.4-year mine life, producing a lot of different metals there that you can see, with annual production starting at about 1 million tonnes per annum. So really good foundation. And to put that in context, this mine will throw off hundreds of millions of dollars in free cash in those first critical years because we're mining really high grade material at Mt Chalmers. So if you consider where we are today, circa 35 million market cap, there's no reason, obviously do your own research and whatnot, seek financial advice, but it's hard to see the valuation of this business staying where it is as we get closer to production and certainly into production with the amount of cash that this deposit throws off. Now, just quickly, and Richard may talk about this further in any questions, but we now have a very clear pathway through the permitting approvals process, through the development and through construction and into operation, and expect some quite substantial updates on this in the coming weeks. Richard and his team have really hit the ground running. We're really a long way, we're a long way through this DFS already. A lot of the key contractors have been either engaged or are being engaged as we speak. There's been a lot of tendering going on behind the scenes, and we'll have an update on that shortly. But the key here is to get this to cash flow as soon as we possibly can for the benefit of our shareholders. So this path is now fully funded all the way through the feasibility study, the DFS, all the way through the front end engineering design, through the baseline studies, and through those key permitting and approvals. So there's a lot to like here, a lot of big catalysts on the way, or value inflection points, and a lot of news flow as we start to take this through that process. So that's a really quick overview, guys. So feel free to ask any questions and we can go from there.
Wonderful. Thank you, Andrew. I might actually get you to stop sharing your screen there and we can jump into it. And again, webinar attendees, please use the Q&A function, which can be found at the bottom of your screen. We've had a few that have come through earlier, actually, Andrew. So I'll start at the top.
Yep.
Just in plain terms, what does this $15 million QIC investment actually mean for QMines shareholders?
Okay, it's a really good transaction for us, largely because with everything going on in the world, pricing of a lot of companies has been depressed of late. It allowed us to seek the capital we needed to take this to really de-risk that development path, but also do it in a really low capital way. So without all the typical dilution you see out there. So the royalty really was a key part of this funding strategy to really minimize dilution. And to put that in layman's terms, we'd be looking at about, if we wanted to raise $15 million, you'd be looking at 350 odd million shares issued. We issued 95 million shares to QIC on the back of the $5 million placement. So it's really, putting it in layman's terms, it's about minimizing the dilution for shareholders. Obviously, I'm a large one as well. I put a lot of my own money into this, and making sure that we're all large owners of this business when it gets to cash flow.
Wonderful. Another one of the things that shareholders have been asking about is the structure. So why the royalty and equity split rather than just a straight equity raise?
Yeah, good question. It's similar to what I just mentioned. It's really about, obviously QIC wanted to be an equity holder, which is, I think, a great endorsement in as I say, the due diligence that they did and the work that we've done here at QMines. They see a lot of upside here in this project. But we were really seeking something that, delivered the capital and allowed us to take this all the way through to a decision to mine, but without the dilution. And so the royalty became a really important part of that. And another way to look at it is I'd much rather give away 2% of my future net cash flows than give away another 25-30% of my business today. So if you think about it, 2% versus 30% or potentially even more, it really is a terrific transaction for our shareholders and one we work really hard on. And other things that were quite important, I think, is getting a premium for that equity at a time when the markets are really volatile. There's not much liquidity out there, and a lot of these companies' pricing has come off. Really speaks to not only how hard we negotiated for our shareholders, but also the goodwill that QIC gave us. They're really keen to see this move through to production for the benefit of Queensland and all our shareholders. So it's a really great transaction for everyone.
And just on that, so can you explain the cap on the royalty? There's just quite a few questions coming through on that.
Yep. Yeah, great questions. So we've decided to cap it at about 40 million tonnes. Obviously, we have about 20 million tonnes in resource. So the royalty does capture any future resources that we either find or acquire in this region. Obviously it's a fair way out there, but we wanted to, and again, it's a testament to QIC that they were prepared to put such a large amount of money in, basically hoping that we'd continue to grow as we have done so well as a team today. So to get their return back and get the capital back that they needed, obviously that cap is a fair way out, 40 million tonnes, but that I think speaks to the fact that they were really confident that we continue to grow this resource base and reserve base over time.
Wonderful. Just a question here for a little bit more detail about the use of funds. So perhaps if you can explain what the company's going to do with the money.
Yeah, absolutely. So the bulk of the money here is designed to go towards the development of the Mt Chalmers project. Okay. So, the key work streams, and Richard might have some follow-up thoughts on this as well, but the key work streams are obviously going to be geotechnical work, looking at the stability of pit walls, more metallurgical work, all the study work, so engineering design, community sort of studies and transport studies, all those things that make up a DFS. Environmental approvals path, capturing all the baseline data around the water, the groundwater and surface water models, and even things like flora and fauna surveys and those sort of things. So a lot of the capital will go towards the development of the Mt Chalmers mine and that DFS. But also we've carved out, as you saw right from the start of the presentation, we've always committed to drilling, and we've always grown our resources from the day we listed on the ASX. So we were really keen to continue that path, so we keep the news flow up for our shareholders. So we've also been able to carve out quite a significant portion for exploration drilling to continue to grow resources, continue to convert those resources into the mine plan, and so on and so forth. So it's quite broad. The other thing it does allow us to do is purchase some more freehold land. So there is some freehold land, that we've already purchased. I think we own 5, small farms up there. So so it's quite broad, but it's largely focused on taking that Mt Chalmers project through to production.
Thank you. So this one's come up a lot. QIC being the largest shareholder now, does that change the way the company is run? And this particular question asks,
Yep.
do they get a board seat?
It's a great question. It won't change the way we run. We obviously, being our largest shareholder, we're obviously going to work hard to make sure they're well informed, and there are some disclosure obligations and things in the agreements. They do have an observer right on the board, so they won't take a board seat per se, but they will have the right to an observer on the board, which we think is great. But confidentially, we are also looking for additional skills, not only on the board, but also within the organisation. And we've obviously just recently brought in Richard to the team, who has a great development background, producing, pushing out over 40 studies in his career and taking a lot of, brownfields projects, through that development, path into production. But we are currently looking for more board representatives, more with more with technical backgrounds, so mining engineers, metallurgists, those sort of things. And also, we're looking for people that have actually operated mines before and built plants. So that is a live work stream that's going on behind the scenes. So watch this space. We're expecting to have some good updates on that in the coming months.
Wonderful. This one speaks to commodity prices, which of course copper and gold have been extremely strong. So, and I know you touched on this, but does the Mt Chalmers project benefit from that?
Absolutely. As I mentioned before, the NPV8 at just on the Mt Chalmers deposit from the PFS done 2 years ago was 373 million. If I, again, do your own research, it's not financial advice, but if I just go into that financial model and put in updated, spot metals prices, it's sort of 800 to 900 million NPV. So, obviously we'll firm that up as part of the DFS. So don't treat that as gospel. Costs will have risen a little bit in that time as well. So we need to really look at what this all means. Richard's coming in to help us with that process, but you can see that NPV has jumped materially. So it is very exciting. And I did sort of mention through the package that I think copper's up 40%, gold's up 130%, silver's up 300%, sulphur's up 400%. It really has transformed this opportunity materially for our shareholders. And so that's what's really been the catalyst for us to really start to drive this down that development path quickly, because we want to try and attract that higher pricing for our shareholders.
There's just a question here about Mount Mackenzie and where that fits into the broader company strategy.
Yeah, great question. We've obviously got 2 additional exploration projects, as I said at the start of the webinar. Mount Mackenzie being about 150 k's out of Rockhampton and Develin Creek. So they're both slightly different deposit styles, but we are trying to build a plant that has potential to maybe put that material through it potentially at the end of the mine life at Mt Chalmers. But they're not quite as developed as Mt Chalmers. So we are still continuing to work on those. And you will note we've just put another resource upgrade out at our Develin Creek project only in late February. And at Mount Mackenzie, we've obviously just finishing up, wrapping up a very large drilling program there of about 10,000 meters. So we've still got a lot of assays coming in. So the next step there will be to do our maiden QMines resource. Obviously, there's a historic resource there, but watch this space. I'd expect that to grow quite materially. But yeah, look, obviously we'd like to bring them into the mine plan over time, but let's be candid and say they're still a lot earlier stage. We're still going to do a lot more work on them, and they're still growing. So we will continue to grow those in the background while we develop Mt Chalmers, and then we can assess what we do with them after. But certainly there's opportunity to add them into the mine plan over time.
Thank you, Andrew. Bear with me, there's lots coming through. This webinar attendee congratulates you on the transaction and just asks, do you know how many other investments the Queensland Critical Minerals and Battery Technology Fund have made to date?
Yeah, great question. I don't know the exact number, and I probably should have had a look before the webinar, sorry, but I know they've invested in a couple of companies. So I'm going to guess it's sort of, 6 or more. I understand from talking to them that the fund has now been effectively depleted, and so we were the last investment that the QIC made in this space. Those funds were largely focused on, trying to, support companies to take these deposits through to production or do all the study work and things to really support that transition to production. So we were obviously a key candidate, and one of the things that they really liked about QMines was the fact that we're not in that typical production centres of Mount Isa and Cloncurry. Obviously, we're about 1,300 k's to the south, so we've got all those great benefits of being close to the coast, close to infrastructure, low capital startup, and also we don't see we don't see quite the amount of rain and monsoonal type rain that they see a lot further north in Queensland. So we've got a lot of key advantages, and I think this investment, just using my words, I think it really helps to diversify their portfolio, which is great. So
wonderful. Sorry again. Has this transaction triggered any strategic interest from end users? And if so, where are you at with those conversations?
Yeah, look, it's a great question. And for those of you on the call who've met myself, you'll know that I've put a lot of my own capital in this business, and I'm really keen. Dilution was a really big thing for me, as it is for you guys as well. So that's why we push really hard on getting these premiums and the royalty component to the investment. But yeah, you'll know that I'm always looking for innovative ways to try and make sure that all of us are as big as shareholders as we possibly can when this gets there. When this is throwing off hundreds of millions of dollars every year for 10 plus years, I want to make sure we all own as much of that as we can. And it's not that far away now. And importantly, it's been de-risked now. So, I am talking with traders. I'm talking with bond issuances. We're talking with, you might have seen recently, there's some fantastic streaming deals that are coming in. And obviously Mt Chalmers is a very large gold and silver credit, about 0.5 gram gold, which is great. So there are potential ways that I'm looking at now of funding this in a very low dilutionary way, particularly given the size of our market cap, so that we can make sure, again, that we're really big owners in this, when we do start to turn on that cash generation. So I can't say much more than that, but I'm talking with a lot of these groups. Watch this space, and as that DFS starts to come to the end, we'll obviously have more to say about this particular topic.
Wonderful. There is one just on the key risks, and obviously with the company moving from DFS and approvals into the actual project development, they've asked about specific milestones that shareholders should be watching out for.
Yeah, great question. So in terms of the milestones, obviously we're going to have some quite substantial PFS updates, and I know Richard's nodding his head there. We've got one we're working on at the moment, so we'll have that out in the coming weeks. We've obviously also got a lot of assays in the labs from our Mount Mackenzie recent drilling. We've been doing, at the moment, we've got geotechnical programs going on. We've got baseline studies. We've got flora and fauna studies going on. We've got surface and groundwater modeling studies going on. You name it, it's a flurry of activity, which is fantastic. And there's a whole lot of other things that are happening as well. So so there's going to be lots of news. You guys know I've got a capital markets background. I'm really big on that. So we will keep those drill rods turning. We want to keep growing this business. We really believe that Mt Chalmers is the start. There are actually 8 other deposits there that aren't in the mine plan yet. So we just want to get one to cash flow really quickly, as quickly as we possibly can. And hopefully that will continue to fund further growth as we bring in some of those other deposits and hopefully make a few more discoveries. So so hopefully that gives you a sense that there's a lot of news in the pipeline.
Absolutely. Andrew, it looks like we've answered all the questions here, so I'll wrap that up. Thank you again for your time, and thank you all for joining us for the QMines Limited Investor Webinar. A copy of today's recording will be available online shortly, and if we've missed any of your questions, please feel free to reach out via the contact details on the bottom of our ASX releases. But thank you, and we look forward to hosting you again next time.
Thanks, everyone.